Right. You've got some great material to work with, mostly this comprehensive report from Messari on the state of Avalanche for Q1 2025. They're a pretty respected name in the space.
Definitely. And we're also mixing in some direct updates from Apertum, a project that actually got featured in that Messari report.
Yeah, so the plan is basically to unpack the key stuff from Q1 on Avalanche. What went down with the network itself, DeFi, enterprise stuff, gaming.
And also understand what it really means for a project like Apertum to get that kind of nod in a big independent report.
Exactly.
Think of this as your fast track, right? We'll pull out the crucial developments, what they signal, so you get the core insights without digging through all the raw data yourself.
Okay, so starting with the basics on the report, Avalanche, it's a proof-of-stake platform, smart contracts, a whole deal.
And it uses that specific Avalanche consensus, right? Known for being pretty quick.
Yeah, very fast finality, high throughput compared to some older designs. The architecture has that primary network, PX, and C chains.
But the report really leans into how it supports these like independent but connected layer ones, subnets they often call them.
Exactly, and that's key. These Avalanche L1s, they aren't just clones. They can run custom virtual machines.
Okay, so more tailored.
Right, give them better reliability, efficiency, data sovereignty,
Mhm.
things like that. The idea is you build a custom network for your specific thing.
And it stops one busy app from bogging down everyone else. Makes sense.
Totally, it isolates traffic.
So how did this whole setup perform in Q1 2025? The report mentions some pretty big growth numbers, transactions especially.
It did, yeah. If you look at everything combined, the L1s and the main C chain average daily transactions jumped up 23.6% quarter over quarter,
And the total number?
hit 3.8 million average daily.
3.8 million daily.
Wow. Okay, what was pushing that number up? The report must have pinpointed the drivers. Two main things. Pulsar, that's an MORDSS game on its own. L1 was a huge driver, like 1.8 million transactions a day just from them,
Half of it, basically.
pretty much. And then just the general launch of new L1s adding to the mix.
Right, the ecosystem expanding. Makes sense. So gaming and new custom chains. What about users? Active addresses.
Even bigger jumps there. Specifically on the Avalanche L1s, average daily active addresses shot up 146%, quarter over quarter.
146%.
Yeah. And if you look network-wide, L1s plus C-chain, the overall daily active addresses figure climbed 81.4% to just over 167,000.
That L1 growth, the 146%, that really points to people using these specialized chains.
Absolutely. It shows growing interaction within those specific environments.
You mentioned new L1s launching. How many were actually like up and running in Q1 according to Messari?
They indexed 32 Avalanche L1s producing blocks in Q1.
32 and more coming online.
Yeah. 8 new ones launched just in that quarter.
Okay, so the L1 landscape is definitely expanding. How did the transaction activity look just within those L1s, separate from the C chain?
So average daily transactions just across the L1s were up 21.3% QOQ, reached 3.4 million.
Still a huge number. Any standouts there?
Oh, yeah. Q-Chain, loyalty settlements saw just explosive growth, up 1,722 are saying QOQ, hitting about 24,400 daily transactions.
1,720%. Wow.
Yeah, massive jump. Pulsar, the game, was still the volume king with its 1.8 million daily TXS. And Lamina 1, they're doing digital content stuff, also had notable growth, up almost 140%.
Okay, and the active addresses on those individual L1s, where were users concentrating?
That's where we saw that big 146.3% overall quarterly increase for daily active addresses on individual L1s.
Right.
Lamina 1 was actually the biggest single L1 by active addresses, and Lamina 1 plus Q-Chain together account for like two-thirds, 66.7% of all the L1 active addresses.
Interesting. So even with 32 L1s, activity was quite concentrated in a couple of them.
Yeah, suggests a few specific applications are really nailing user adoption right now within their custom setups.
Ties back to that idea of isolating the high traffic apps. Okay, let's shift a bit to the tech underneath. The report really emphasized the Avalanche 9000 upgrade.
It did. Called it the largest network upgrade since mainnet launch, which is, a pretty big statement. It went live back in December 2024.
Largest since launch.
Okay,
Wow.
what did it actually do, especially for these L1s we've been talking about?
The headline change, driven by ACP 77, was making it way, way easier to launch an L1.
How so?
It basically got rid of the rule that L1 validators also had to be P-chain validators. Big hurdle removed.
Ah, okay, so they're decoupled now.
Mostly. L1s now just pay a dynamic fee to the P-chain validators instead of having to be P-chain validator.
Okay, so it loosens the requirements but keeps an economic link. What does that unlock for people building these L1s? What are the benefits?
It really gives L1 creators full control. They can customize everything, staking rules, gas token choice.
Anything they want. Pretty much. They can even build in regulatory stuff like KYC or geofencing right into the chain's rules. Plus, they can use whatever virtual machine works best for their app. It's much more modular.
Like building blocks for specific digital economies. That sounds way more flexible.
Exactly.
Were there other key tech changes in Avalanche 9000? Or Etna, I think they called that phase.
Yeah, Edna included a few ACPs,
Hmm.
Avalanche Consensus Proposals. ACP 125 got a mention. It slashed the C chain's minimum base fee
Slashed by how much?
by 96%.
Yeah.
Dropped it from 25 nano AVX down to just 1 nano AVX.
Wow. Why such a big cut?
The report suggests the old minimum was just artificially high, higher than market demand needed. This lets the fee float more naturally based on actual C chain traffic.
Makes sense. Adjusting based on usage. Anything else tech-wise? For developers, maybe?
ACP 113 was highlighted too. Provable virtual machine randomness.
Okay, what's that for?
Getting true verifiable randomness on a blockchain is hard, right? Everything's usually deterministic.
Yeah.
This gives devs a solid way to get randomness for things like NFT mints, game outcomes, stuff like that. Super important for games and creative uses.
Gotcha. Verifiable randomness. Okay, let's pivot to DeFi. The C-Chain's DeFi scene. How did that look in Q1?
Bit of a mixed picture on total value locked, TVL.
How so?
Well, if you measure TVL in AVX terms, it actually went up nicely, up 61.9% QOQ to almost 60 million AVX locked.
Okay, that sounds good.
But if you measure it in US dollars, TVL went down 14.7%, fell to $1.1 billion.
Huh. More AVAX, but worth less in dollars.
Exactly. The report points to AVX price depreciation during Q1 as the main reason. Even with the dollar drop, Avalanche was still ranked 10th globally by USD TVL.
Right, and within that $1.1 billion, which DeFi protocols are leading on C-Chain.
Now, AVA was still the biggest fish, actually increased its dominance a bit. TVL up 3.3% to over $500 million, about 46% dominance.
Still number one. Who else was big?
Benki and LFJ were next, but they both saw their TVL and market share dip a bit.
Okay. And what about trading? Decentralized exchanges, DXs.
DHX volume actually fell. Average daily volume on C-Chain was down 17.8% QoQ to around $175 million.
Volume down, even though more DXs were popping up.
Yeah, the report noted the number of DXs increased to 43, but overall volume still slipped.
Interesting. Who is leading the DX volume then?
LFJ stayed on top by volume, even though its own volume decreased.
Okay.
But the interesting mover was Faro Exchange. Their volume jumped significantly up 67.5% QoQ to over $38 million daily average.
So some shuffling happening there, maybe liquidity moving around.
Seems like it. Shifts in user preference, maybe.
And stablecoins. Always crucial for DeFi.
Total stablecoin market cap on Avalanche C-Chain went down 15.9% QoQ, landed at $1.9 billion.
Okay. Any shifts within that market?
Yeah, this is interesting. A definite shift in dominance.
Right.
USDC's market share grew a lot up, 42.7% QoQ to $653 million.
While USDC.
USDT share went the other way, down 34.5% QoQ to $1.1 billion. Still bigger overall, but USDC made significant gains.
Huh. Wonder what drove that switch in preference on Avalanche specifically.
Could be specific partnerships, integrations, maybe just changing risk appetite. Something to watch.
Definitely. Okay. Moving beyond pure crypto finance, the report seemed pretty bullish on enterprise adoption and real-world assets, RWAs.
Yeah, this seems to be where that L1 flexibility really shines, especially frameworks like Evergreen, letting you build in KYCML, privacy controls, things institutions need.
And it wasn't just talk, right? The report listed concrete examples from Q1.
Absolutely. Real deals happening, like
Yep.
Wyoming picking Avalanche for its state-issued stablecoin, WIST, first state-issued fiat-backed token. That's huge.
This one's mind-boggling scale, digitizing over 700,000 land records in India's Dantewada district, using an Avalanche platform called LegitDoc.
700,000 land records.
Yep.
The scale of that is massive. Government adoption. Truly. Then in entertainment, you had Robert Rodriguez tokenizing film financing with Republic on Avalanche.
Bringing movie investment onto the blockchain. Cool.
And maybe the biggest name? BlackRock.
Yeah.
They launched their BUIDL fund, that's their tokenized money market fund, for institutions on Avalanche via Securitize.
BlackRock using Avalanche, that's a massive signal.
Huge. And the report noted, Avalanche C-Chain quickly became the second highest TVL network for BUIDL. That's significant validation.
Definitely sends a message. Any others?
Lidio and OpenTrade launching Euro IBAN accounts using Circle's EURC on Avalanche, expanding banking access. Oh, and MasterCard co-authoring a white paper with Ava Labs on asset tokenization on Avalanche.
MasterCard too. Okay, so
Uh,
serious players are clearly engaging. It's not just crypto native stuff.
Exactly. These are serious, regulated, large-scale use cases.
It really shows that custom L1 approach attracting diverse applications, and gaming seems to be another one of those core strengths.
For sure. The report kept pointing back to gaming platforms, Pulsar, Beam nodes, Warp Chain as major drivers of network engagement.
Any specific game news highlighted in Q1?
Yep. Beam nodes launched, letting people stake on the Beam network, which is a Web3 gaming platform itself.
Infrastructure for gaming.
Right. And speaking of infrastructure, Warp Chain launched. That's a whole new Avalanche L1 built specifically for Web3 gaming developers.
So building tools for game devs within the ecosystem.
Exactly.
Oh.
Then there was Haunted Space, a cross-platform game, announcing it was using Avalanche C-Chain for some AI features.
Interesting integration.
And one more, kind of different, Gonzilla Games, which builds on Avalanche, actually acquired Game Informer magazine.
The gaming magazine, huh?
Yeah, shows investment flowing from the ecosystem into the wider gaming media world. Interesting move.
Okay, so we've hit network growth, the big tech upgrades, DeFi shifts, those major RWA and enterprise wins, and the gaming scene. Let's leap back to Apertum. They got featured in this Messari report.
Right, and as Apertum pointed out in their own update, getting into that report was a pretty big deal for them.
Why is that specific recognition so significant for a project?
Well, being in Messari's main State of Avalanche report means you're formally recognized as part of that landscape, alongside the other key L1s launching or growing in 2025. It's external validation.
Validation for who?
For their whole community, really.
Mm.
APTM holders, the devs building on their chain, the DAO1 members. It shows objective progress.
And credibility beyond their own community.
Exactly. The Apertum team said it puts them on the radar of institutional eyes and serious builders, people who look to solid independent research before they engage or invest.
And Messari has that reputation for credible data and transparency.
Right. Their whole mission, as Apertum noted, is about bringing transparency and usable data to crypto.
Yeah.
So getting featured by them carries weight. It's not just a casual mention.
Yeah, that third-party validation is gold in this space. Hard to overstate that.
For sure.
Okay, so let's try and synthesize this. What are the main takeaways from this whole Avalanche Q1 2025 picture based on Messari and the Apertum angle?
I think the big things are, one, strong overall network growth, transaction-wise, really driven by those custom L1s like Pulsar and just new ones coming online.
Okay, L1's driving growth.
Two, that Avalanche 9000 upgrade was technically huge, made launching and customizing L1s much easier and more powerful.
Enabling that L1 strategy.
Exactly. Three, serious wins in real-world asset and enterprise adoption. Wyoming, India Land Records, BlackRock, MasterCard. Those are significant.
Real-world traction.
Four, gaming is still expanding, driving activity and infrastructure build. And five, the C-Chain DeFi scene, while seeing some TVL shifts and stablecoin dynamics change, is still a core, substantial part of the picture.
And underlying all that, reports like Messari's are just vital for actually understanding what's happening.
Absolutely. Need that objective analysis to cut through the hype.
So here's a final thought for you listening. We've seen this really clear push from Avalanche, especially with Avalanche 9000, towards enabling these super customized, application-specific L1s. They're supporting everything from games to loyalty points to state money to institutional funds.
A whole spectrum of uses.
Right. So what does this architectural choice, focusing on a network of specialized chains instead of trying to make one chain do everything, what does that suggest about where decentralized networks might be heading overall?
Interesting question.
And how might that focus on tailored blockchain experiences really change how you interact with this tech day to day? In finance, sure, but also in gaming. Maybe even how you interact with government services or prove ownership of assets, something to chew on.